Welcome back. Good morning, my crypto savants. Bitcoin continues this bullish surge, and we here at Be Crypto Savvy want to take a closer look at what's been happening recently and what is likely to happen in the future with the help of some TA. And now, as I jump into this, if you do learn anything useful, please give that like button a flick. And if you are new to the channel, why not consider subscribing and staying up to date with all of our future videos as well. Now, before jumping in, as always, nothing you see on this channel is ever financial advice, but rather our thoughts and opinions, and these videos are for entertainment and educational purposes only. Now, we are currently looking at Bitcoin on the hourly time frame, and we have finished this three-wave corrective ABC pattern. And now if we take a little bit of a zoom out, we can see where we should end up expecting to go from what has happened in the past. Now we can see prior to this ABC corrective pattern, we had this five-wave structure going up. Now we have talked about on the channel before and mentioned when you start with five waves, you end in five waves. Now I do believe this is a bigger ABC type of pattern, going more of like a B, C type of structure. And it seems how we started with this five-wave structure here. We have our three-wave ABC corrective pattern. Now let's zoom up here a moment and let's map out what we would expect this to be. So our ABC pattern ended down here. Let's jump into our five waves. So our first wave, you can see, came here. Second wave, pullback. Now we would expect our third wave to come up into this area. We'll find out exactly where we should expect that little pump here in a moment. Fourth wave pullback, and then finally our fifth wave extension. So where would we expect this first decent size pump? Now, if you're not familiar with Elliott wave theory, when you have your 1, 2, 3, 4, 5, your third leg is typically your longest. Probably 8 to 9 out of 10 times, your third wave is going to be your longest leg. If your third wave is not your longest leg, it will be your fifth leg. However, let's expect our third wave to be what is typical, and how to measure that is we're going to jump into our Fibonacci. Grab this, we're going to pull this down. We're going to move this up here. And this third wave, we're going to do a horizontal ray. This 1618 is about where we would expect this third wave to end. So right around this area. Good chance that it might pop up a little bit higher just with the bullish momentum that we've been seeing in the market recently. So just expect this right around this area, and then we would expect our pullback as so. So this would be, let me get that out of the way. So this, looking at this at a bigger picture, this is kind of where I'm looking to end up. We'll just slide this guy over. I would assume our price range for this wave 3 before we expect our first bigger pullback. Now this third wave won't be just a straight rocket all the way up to this price point. This is going to actually be constructed of a mini 5-wave formation inside of the third wave, and then you would see a 3-wave corrective pattern inside of this fourth wave. And we'll get into all that stuff in future videos and make all this super easy for you. For now, we're just going to leave this portion right here. We're expecting our third wave to end somewhere around the slightly above $30,000 range, possibly as high as 31.5, give or take, before seeing that ABC pullback down here. And then once we get that figured out, we'll be able to kind of see where our fifth wave will end up. As for now, we're just going to leave this at this point and jump into our daily time frame now. So we're zoomed out in more of a macro outlook picture here. Now, I do want to talk about this support line here first. This was previous support back here, you can see, and then we fell through. That was actually the FTX debacle time period. That's what knocked us down. We came back up. We tested it several times here. 1, 2, 3, 4, you can see. Got rejected, came back up, tested it a couple more times, rejected again, and we came up and tested it here before finally coming through, and now are using this as support. Now, you can also see in this green box that this used to be red. This is kind of how I like to use my support levels once we break through, and this changes from resistance to support. I'll switch this to green. So once we break through the support level here that we've talked about before, this is a major structure support that propped up our entire bull run back here. You can see that we use it as support here, here, and tested it here before ultimately falling through. So zooming back in, let me get this back to where we need it. Zooming back in, this yellow box here is where we had just plotted out where we would expect our fifth wave that we are most likely currently playing out. So this yellow box would be where that price point would be. This red box is where we originally had our destination kind of mapped out before we had more of a precise look. So if you caught our video yesterday, we had talked about how our daily RSI down here is getting very exhausted. You can see back here where I have circled, it's not out of the question to spend several days up in this exhausted area if we have the momentum behind us, which it seems like we do. So it's not out of the question to spend a little bit of time up in this area, but do note that we are in that exhausted area and would likely be looking for a slight pullback, if not at least a little bit of choppy sideways action in order to kind of reestablish and catch the breath of this push. Beyond that, I would also like to point out that you can see when we're in these upward channels, we would typically expect a break to the downside. Like you can see here, we have this upward channel, we break to the downside, we have this upward channel, it breaks to the downside, upward channel, we break to the downside, same thing over and over again. Now, if you look at some of these, we have this downward channel, and that breaks to the upside. We've got this downward channel, this breaks to the upside. During this bull run back here, we had these downward channels, breaks to the upside, downward channel, breaks to the upside, downward channel, breaks to the upside, and that actually led right into this upward channel that broke to the downside, and so on and so forth. Now, I have been saying repeatedly that I would expect a sizable pullback, and we're going to grab this parallel channel, and you can see we really are still doing the same thing. I know there's a lot of channels out there that are pushing the bull market narrative. I understand that that's what this looks like. I really need more confirmation before I am in that camp. I've mentioned in previous videos, I am about 70% invested. The majority I had the majority invested down in this area, and my final big amount was down in this area, and I've still got about 30% left because I was expecting one more downswing before ultimately making that actual real bull market push. And I do have some reasons why I believe that, and I've talked about them in the past, and I will talk about them in the future as well. However, I do believe that we are going to end up seeing, at least retesting this area in the coming months. When I'm saying, I expect a sizable pullback. I'm not expecting that to be, necessarily this week. Now, with the extension that we were just talking about into this yellow box area, now I do expect, keep in mind, we have the the FMOC meeting this week where they will be announcing the percentage rate increase or no increase at all, which that announcement will be pretty big depending on where we go. Now, if you pay attention to news in the UK, they they went with a 0.5% increase, which is where our Fed was previously talking about going with a 0.5 before we started seeing all these bank closures and bank collapsings across the globe. I mean, there's been, I believe, five so far. Now, that's what the Fed was talking about prior to the bank collapses. So it'll be interesting to see if they follow suit with the UK, which would stick with that 0.5% increase, or the market right now pretty much has a 0.2520 priced in. I believe this right here is going to be pretty much our priced in 0% increase or 0.25. Now, when I'm looking for a sizable pullback, typically when those things happen, it just so happens to be where there's a news release statement or something in the macro picture that really lines up perfectly with those big pullbacks. And, it wouldn't be out of the question to see the Fed go with at least a 0.25 or even possibly a zero point 0.5, which if we ended up seeing a zero point 0.5, that would be the perfect setup to have this completely pull back. So just something to keep an eye out with that. Now, I do want to jump over into the Bitcoin dominance chart as well. We talked about this yesterday as well on our video that was released. You can see, let me get this a little bit easier to see there before I get this guy out of the way. Stretch this out. So this is currently where we are sitting right here. This is the Bitcoin dominance chart. So this is how much of a percentage, you can see over here, how much of a percentage of the crypto market Bitcoin is dominating. Okay, so you can see every time that we peeked into this resistance zone, this red box is our resistance zone. Every time we peeked into this box, we had pretty sizable pullbacks. You can see when we peeked into this one, we pulled back as far as dominance goes, almost 8%. When we peeked up into it here, we pulled back almost 20%. When we peeked up at it over here in October of 21, we had about a 18% pullback. Over here in June of 2022, when we peaked into this area, we had a 20% pullback again, and we are currently sitting just at the very bottom edge of this box. This goes from about 47% up to about the 50% level. And if we zoom in here, this is kind of just based off from the macro events going on and previous data. This is kind of where I expect us to kind of top out at before this gets reversed and goes down, which at that point you'd probably see a little bit of a push in the altcoin market, just an FYI, and we'll kind of get into that later as well. But I do expect us to get up to this, high 47% to high 48% before we see a reversal. And you can see down here, the RSI for the dominance is very overextended. Perfect time to see that reversal. So you can see here, I just quickly threw on our MACD indicator as well. So what we will do when looking at this is look for a few indicators. We can see on our volume bar right here that we have been going in the downward direction. We've been having less volume. Let me get rid of these guys. So our volume's been decreasing, right? The The MACD, I would watch for this blue MACD line to start to curl. Once we get across in the MACD line, going into this downward direction, I would look for a reversal pretty quickly after that. And at the same time, watch for our RSI line over here to curl down as well. And with all three of these, I think that would be great confirmation that we have reached pretty close to our peak and would be expecting a reversal in that trend. All right, so finally, we are going to end this looking at the daily time frame for Bitcoin again. I got rid of some of that clutter, so just to kind of recap all this, we are sitting on top of our support line right up here, and sitting on our support line currently right here. We have been testing this same line since back here in middle of October, and Elliott wave theory also supports the same climb, so that's good confirmation that we should see a continuation in this direction. We should end that Elliott wave fifth wave structure inside of this yellow box around the $30,220 area to the $31,500 area, possibly seeing a little bit of extension with all the bullish sentiment in the space right now. After that, I would expect at least a little bit of a decline, pullback. You can't ever just go straight up. Always keep that in mind. With that pullback, I would expect us to test our previous support area down here. So probably around that $25,279 area, possibly down to the $23,562 area, possibly being able to break through there if you do expect a little bit of support to be able to pick up right around this sub $20,000 area up to around the $21,500 area. And that's going to do it for us today, folks. Thank you for joining. Go ahead and leave your comments, questions, anything like that in the comments. We'll make sure to get to those. And I hope everybody has a great start to your week. Enjoy your Monday. We will catch you on the next video. Peace.